Welcome to the Big Four Accounting Firms podcast, brought to you by big4accountingfirms.com. We have a great show today, but before we get to that, I wanted to remind you of a few things. We have 2 great books on Amazon that will help you get the Big Four job that you deserve, and I've included links to those books in the show notes. Additionally, I wanted to remind everyone to make sure that they subscribe to this podcast to stay up to date on the latest Big Four news and career tips. Also, make sure to share the show with a friend if you get a chance. Lastly, follow us on Twitter, Facebook, Instagram, and LinkedIn. I'll include links to all our social media in the show notes. Thanks and enjoy the show. There are many people that go into accounting and the Big Four accounting firms thinking that they can transition from being an accountant to finance. Now, we covered the ability to do that in a previous podcast, and I'll include a link to that podcast in the show notes. But one of the most popular positions that people choose to seek when they're looking to go to finance is a financial analyst. So today I wanted to talk about going from the Big Four accounting firms to becoming a financial analyst. Now first, let's define what a financial analyst is. According to the U.S. Department of Labor, a financial analyst is a person who provides guidance to businesses and individuals making investment decisions. They assess the performance of stocks, bonds, and other types of investments. Financial analysts typically do the following. They recommend individual investments and collections of investments, which are known as portfolios. They evaluate current and historical financial data. They study economic and business trends. They examine a company's financial statements to determine their value. And they also prepare written reports of their findings. Now, where do financial analysts work? Financial analysts typically work in banks, pension funds, mutual funds, security firms, insurance companies, as well as other businesses. Financial analysts are also called securities analysts and investment analysts. A financial analyst can typically be divided into 2 categories: buy-side analysts and sell-side analysts. Buy-side analysts develop investment strategies for companies that have a lot of money to invest. And these companies, called institutional investors, include mutual funds, hedge funds, insurance companies, etc. Now, sell-side analysts advise financial services sales agents who sell stocks, bonds, and other investments. Some analysts work for the business media or other research houses, which are independent from the buy side and sell side. And financial analysts also typically focus on trends affecting a specific industry, specific region, or a type of product. And an example that many people are familiar with is they focus on areas such as energy industry, or an area such as Eastern Europe, or maybe even emerging markets. I also wanted to provide a couple examples of financial analysts. An example of a financial analyst could be a portfolio manager. Now, a portfolio manager selects a mix of products, industries, and regions for their company's investment portfolios. And in order to do that, they obviously need to perform financial analysis. And another example is a fund manager. And fund managers work exclusively with hedge funds or mutual funds. Both fund and portfolio managers frequently make buy or sell decisions in reaction to changing market conditions. And in order to do this, they need to perform financial analysis. And another common type of financial analyst is a ratings analyst. Rating analysts evaluate the ability of companies or governments to pay their debts, including bonds. Based on their evaluation, a management team rates the risk of a company or government not being able to repay its bonds. Now, many people choose accounting instead of finance as a major because they feel like it is too hard to go directly into an investment bank or finance right away, because investment banks and finance departments of companies are highly selective with potential candidates. Based on all this information, is it possible to transition into a role of financial analyst from the Big Four accounting? In my opinion, the answer is yes, if you play your cards right. Financial analysts do a lot of the same things that Big Four accountants do. They evaluate historical information, which is something that auditors at the Big Four do as well. And they also examine financial statements to determine values of companies, which is also something that accountants and Big Four auditors do. Now, given that Big Four auditors do a lot of the same things that financial analysts do, we know it's possible. So how does one go about transitioning? Now, I've seen 2 methods in my career. I've seen many candidates spend 1, 2, or 3 years at the Big Four and transition directly into a low-level associate type role at a small equity firm. Obviously, the best place to do this would be in a city like New York, as that is where the majority of financial services firms have operations. Another method that I've seen is that people will go to the Big Four and then go back to school to get an MBA in finance, and after they get that MBA in finance, then transition into a financial analyst role after graduating. Now, the Big Four allow you to go to school at the same time as working, so you could get your MBA while you're in the Big Four as well. And then once you get that MBA, transition out and go to work for a financial analysis firm. Another thing that I personally recommend is just changing your major to finance if you're still in school, and then try to relocate to a city like New York, where the majority of finance companies are located. Now, those finance companies, they recruit from lower level universities in New York because of the convenience of location, as opposed to trying to recruit for a finance role in New York from a different location in the United States or around the world. So they'll recruit from smaller school like Fordham or Baruch just because those programs are close to them. They can see the candidates face to face versus having to go out to different schools across the country and recruit from, like, let's say Wisconsin or going out to California. So if you want to increase your chances of getting a financial analyst role in a city like New York City, move to New York City. This is like people that want to work in startup culture and they don't move to San Jose. If you move to San Jose or Silicon Valley, you'll obviously have a better chance of getting a startup role. So do the same and move to New York City if you want to be a financial analyst. In conclusion, there are many similarities between financial analysts and Big Four accountants. So it is possible to transition. But in order to transition, there are several options available, from applying for the position directly out of the Big Four, going back to school, and getting an MBA. And lastly, you can just change your major now and recruit for a finance role directly out of school. To get more Big Four career tips, make sure to subscribe to this podcast. We can also use your help in growing this podcast so that we can continue to bring you great tips. But in order to do that, we'd like you to share this podcast with a friend and also provide us with a review on iTunes. We'll include a link in the show notes with how you can provide us with a review on iTunes. That's all we have for today. Thanks for listening.